The crypto market looks primed to make its next move, and you can see it is bouncing on the hourly chart over here. A whole bunch of cryptos are up almost in the double digits already. So looking good so far. The higher low may be set, but in the short term, there is still some possibility for further downside. So stay tuned until the end of the show, because we're going to go over everything that you need to know and more. Let me know in the comments as well. Are you present? Let me know if you're here. Let's quickly have a look. Okay, I see Whale Talks here. We got Black Sales is here. We have 𝗕𝗬𝗕𝗬𝗍𝗍. Welcome back, guys. Welcome, everybody. Let me know in the comments right here. Are you bullish or bearish looking into today's price action? And we will get started with the show. So why is price moving? Well, one reason may be because of the Chinese PMI, at least that came out, the manufacturing PMI data. It confirmed a move back into expansion. The PMI essentially shows the manufacturing index, and it gives an indication of whether the market is expanding or contracting. I think the US one is coming out today as well, so we'll want to keep an eye out on that. And you can see from TED Talks, he says, after 6 consecutive months of contraction, China is officially expanding. The Chinese stocks are breaking out of a 3-week consolidation at resistance. Bitcoin could follow, and we are seeing small etchings of the upside move currently taking place. And if this is a higher low, then potentially we could reach those 26, 27K targets. So looking at the Forex calendar over here, yes, we're on Wednesday. We have the US ISM manufacturing PMI data. Currently, it's forecasted that it's going to be at 47.9. Anything that's under 50 would be indicative of a contracting economy and a contracting market. Usually for risk on assets to rally, you want to see expansion. But remember, the crypto market doesn't hedge completely on just what the US is doing. There are other countries in the world that, of course, will affect crypto, China being one of them. So if this can be in unison with China and this can tick up back over 50 and start to expand, that would be very, very, very bullish. So keep a close eye out on that. Mark it off on your Forex calendar. And then again on Friday, there's going to be another one. That's the ISM Services PMI, which is coming out. So I'd say Wednesday and Friday are the most important days from economic release standpoint. So I thought, let's measure against the SSE Composite Index. That is essentially the index for China to see, does this agree? Does the chart agree with TED Talk Macro's market sentiment over here and the expansion of China? And looking at this is very, very interesting. This is actually a multi-decade trend line starting all the way back from May of 2005, which has reacted every single time that price has come into it. So you can see reaction, 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 and we've had another bounce. And I wish I'd picked this up sooner, because had we done that, that would have been coming into November. So this is from the 7th of November. Over here was the last touch point that we came into and bounced off. But importantly, you can see it is starting to form an uptrend again on the high time frame, on the weekly chart that is, and you have reclaimed that 200-day moving average, which is always an important one. So I would say you're viewing this as your next potential major area of resistance. And based on the whole China narrative that's been obviously the main crypto meme at the moment, I would kind of be focusing on this area now as your next major zone. If price can start to push through and get above this for the SSE index, I would say that would be incredibly bullish. Then that means that possibly the rest of the markets will start to rally, at least crypto. So if you can see it hold that as support and then potentially take off, that could be good for crypto. So that's one thing that I'm watching over there. And then remember, we can look at the liquidity injections from the People's Bank of China, which is over here. We'll keep a close eye out on this. This only updates every couple of days. So we'll wait to see if there is going to be another print or liquidity injection within China. That could be good for crypto. And then you have the net US dollar liquidity, which is definitely in a strong downtrend, but a break of this trend line could be good, a convincing break. Still chart it the same way that you would price. If you can start to get above this 6.10 level, that could be indicative that maybe the net liquidity within the US is going to start to uptick, and that would also be good for crypto. So monthly close. We did get the monthly close yesterday. But it wasn't able to close above the monthly moving average 50 as well as the major resistance. Yes, price is moving above the major resistance zone right now, and it could even potentially get above that 50 moving average on the monthly chart. But ultimately, we're going to be left waiting once again to see what March does, because closes are what's most important, right? It's not really necessarily the wick like we wicked over here. Yes, people got very bullish, but ultimately what we want is we want to see closes above these levels. So I have the important moving averages outlined on the monthly chart. If you're a very, very high time frame investor, this is something that you might want to put on. I've got the 7, the 20, and the 50. So the white one is the 7. The 50 is obviously this one over here, the pink, and then we have the the 20 over here at the top, 50, and then the white one over here. So you want to see price recapture all of these and get back above. You want to see them angled and postured towards the upside. If you start to see that, that creates the etchings of a very, very powerful, strong trending move. We're not at that point yet, but on the weekly chart, we are seeing some etchings of a reversal. And I think Michael showed it well over here. He says after an all-time high, bear markets typically end after the third swing printing a low. Will this time be any different? So if you look all the way back from 2014, you have 3 drives to the downside. 1, 2, 3. And then again in 2018, 1, 2, 3. And then here we have it in 2022 leading into 2023, 1, 2, and 3. And here it is on the price chart. I have the 𝗍𝗃𝗃𝗃 candles on over here. Take a look at that. So you got 1, 2, and this would be considered as the third swing that just took place right now. What I like about this is it lines up with what I look at, which is the lucid 𝗧. I have shown you guys before. That's one of the reasons that I started to flip bullish late December. Late December is when we broke this lucid 𝗧 for the very, very first time. I think it was around the 27th of December. I did that show over there. I said, this is a big, big, big deal. Pay attention. Now you have the presence of a cross as well. The EMAs that I'm using is the 9 and the 18. You can see it over there. So 9 crosses above the 18 EMA with the presence of the lucid 𝗧 breaking. That's indicative that you have a potential new trend that's forming. I know and I understand that for the time being, we're still range bound, but you do have the potential for a new trend to start to form. And you can see the way that this worked towards the downside as well, right? Let's look at the all-time highs. So you had the lucid 𝗧s tracking price up, tracking price up, tracking price up. And then on that candle that took place on the 15th of November, 2021, it broke the lucid 𝗧 to the downside, which is why that little asterisk jumped up to the top. Now that would be your next resistance, right? You wait for the presence of a death cross, again, with the cross of the white below the yellow. That took place at a price point of $48,000. That was your signal to go short. And pretty much you would hold your short until such time as the moving averages, or the EMAs at least, cross back to the upside. So you're out from 48K, out, and you're back in at 21,800. Tell me that's not a good trade. Let me know in the comments, would you have taken that trade had you known about this trading system beforehand? I mean, this is one of my edges. It's something I use. I like to use this from a high time frame perspective, and then I oftentimes zoom in. I have other little indicators that I use to kind of pinpoint an earlier exit and entry, but this is one of my main things that I look at. So keep that in mind with regards to your trading. This is one reason that my bias is still looking for a potential major upside move. Yes, treating it as a relief rally for now, in the same way that you had this over here. You had the relief rally from, what was that? From 32K all the way up here to 48K. That is an enormous move. But the big difference, yes, you came through here, you broke the lucid 𝗧 once again, meaning that the lucid 𝗧 started to print at the bottom over here. But what's the big difference? The EMAs did not yet cross to the upside. The difference is here, you broke the lucid 𝗧, which is following a less severe angle towards the downside. So here you were aggressively moving to the downside, which means that relief rallies from here would most likely break those lucid 𝗧s. But the difference is here, you started to flatten out. Lucid 𝗧 started to trend less aggressively. Then you broke it and you have the cross. So that's a double confirmation for me that I should not necessarily be looking for shorts all the way down to 10 to 12K, although that is, of course, a real possibility. That's still a possibility. We can't take that off the table. We can't rule that out. It's still something that can happen, but it's not the main base case that we're looking at over here. I wish you guys could see Fred. He is the co-founder of our company, and do you guys hear that? blowing his face against the window like a child. But anyway, all right. Here we're looking at a channel on Bitcoin. This is in a parallel channel towards the upside. Yes, these have a high probability of breaking to the downside, right? Anytime that you have these rising wedges, they usually do eventually break to the downside. But this is kind of what I'm hoping for. So the reason why is because I think that we all know about the major resistance, right? That was coming up at 25K. It's the triple resistance, the 50 EMA cross below the 200 EMA, or MA, excuse me, the 50 cross below the 200 MA. So you have that death cross, price coming into that 200 moving average on a weekly chart, strong horizontal resistance all the way across. So based off of these wicks over here, let me just draw you the range so you can see exactly what I'm talking about. There you go. So you got that main range. We knew that was going to be a range high. But my experience with Bitcoin is Bitcoin likes to screw a lot of people over simultaneously. So you wouldn't expect that it would trade so clean. It doesn't trade as clean as what the stock market would. If this was a stock market, you would say, hey, resistance, sell. Bitcoin likes to deviate above these resistances a lot. So, or supports as well. So if you come into a support region, it usually doesn't hold support. It goes below support. Later on, it recaptures that support. So support, usually it comes below, recaptures first to stop everyone out, and then price goes up. And it usually does the same thing to the downside, which means that you have a lot of people that shorted over here. That means there's a lot of stop losses over here. And I still like the idea of one more deviation up and then under, and then possibly you can come back down. That's what I'm looking for. Where would those levels line up? Well, if you're using this simple channel that I have, the rising channel over here, you can see prices bouncing off of this level. A daily close above 23,870, which is those wicks over there, would confirm that this is probably going to be a higher low. Then you want to go to your next level. Where's the next level? Well, if you push up above that major horizontal resistance to the upside and you can wick through that, you're meeting the middle of that channel at 26,124, depending on when it happens. I've got 1, 2, so I'm giving it 2 days. If you move it on, it's going to go a little bit higher, 3 days, 4 days. You can obviously track it along, right? But give or take, just above 26,000 is the zone you're looking at. Get above that, this would get people really bullish. Get to about 29,429. Not only is that the top of this channel, but it also happens to be a retest of the breakdown zone. So here you have the order block. That's your breakdown zone. Another area of interest. It lines up exactly with that. The other zone that I'm looking at as well is then you have a retest of all of this underside resistance, which hasn't been tested. Look at all those wicks. Wick, wick, wick. And then obviously we just broke straight down through that level. Usually high time frame price will like to come back and retest those zones. So we'll keep an eye on this. This is kind of my bullish case scenario. Once we get up here, of course, I'm going to reevaluate, definitely reevaluate. Need to see how things go from there. Let me know in the comments, what do you think comes first? Do you think 18K comes first or 28K? Tell me in the comments, 18K or 28K. I see Piotr says 28K is likely. Black Sales, 28K is likely. 27.8. Black Sales, you keep changing your numbers. First you're 27.8, now you're 28. Let me know, 18 or 28. I see Yaku's looking for 11K, straight to 11K. No retest of the high levels first. 18K, 28, 9K, 18. So again, the opinions are very, very divided over here. And I want to be clear with my analysis, guys, as well, that this is not, I'm not being religious about this, by the way. I'm just looking at the charts and where the higher probability trades are at the moment. I'm not religious about crypto. I don't have this, this hodl position that I want to defend to the grave. Although I am building a bit of a hodl position, but I'm not here to defend it to the grave, which means if price goes to 11K, I'll prepare for that. I'll buy up a whole lot more there. But I also want some exposure right now, which is why, of course, I am still dollar cost averaging on OKX. So there's the dollar cost average portfolios. They're still buying on a daily basis. Here's the amount that they're buying every day. There's how much I've already entered into the market currently. And I'll keep adding to these positions. So I experienced a small amount of drawdown. Remember, if this is minus 4% drawdown, that doesn't mean I've lost 4% of all my money, because my dollar cost average positions are only a small amount of my overall portfolio, right? I'm controlling my risk. I'm losing less than probably, I would say I'm losing less than 0.01, somewhere in that region at the moment. All right. Very important, though, to also look at things from the bearish case, and Caleb says it over here. We have to stay objective here, fam. In November 2022 and early 2023, I highlighted that Bitcoin was forming a bullish RSI divergence. So there you had the bullish divergence. And then he says today it's forming a bearish RSI divergence. Let's see how it plays out. Stay flexible and recognize the risk, and then you will survive. And that's really what it's about. It's about survival within these markets. If you lose all of your equity, you can't play the game. It's over. The game's over for you. So if you look at this, usually the best forms of divergences are when you have 3 drives. So that, again, lines up with showing me that potentially you're going to get one more spike up. I would love to see that. Let's zoom in there for you. So you can see RSI coming down. So that's your first test. Second test, RSI comes into the trend line. Third test, price 1, 2, and then third test. 3 drives of price action into the trend line. 3 drives of bearish divergence. It's in line with our channel. Perfect. We take our profits and we reassess what happens from there. So that's what I'm watching. Keep a close eye on that. The stock market has bounced from the levels that we're watching, but it's not enough yet. It's not enough yet. I'm looking at the just below the 0.75 of the range. So just a quick reminder for anyone new, we have our range low on the stock market coming in at 36.48. Then we have 25% of the way through the range coming in at 37.83. We have the mid-range, 39.15, critical level. Price has to hold this, because not only is that the mid-range, it also lines up with the 200-day moving average, and it also lines up with this long-term trend line, which was the low highs we broke out, came back into that zone to retest. So that's where your risk is, right? Everything comes down to this mid-range region. Then next level is the 75% of the way through the range. Now, if you take a close look here, let's zoom in. This is when you broke down from the 0.75 level. Price came up. This is untested liquidity. You can argue whether it's here or here. But basically, I'm looking at this as a potential next sweep of that liquidity. So if price can start to gravitate up towards here, sweep that liquidity, maybe you see a scenario like this where you get a little bit of, again, an over and then under. That would take Bitcoin most likely to around 30K. If the stock market can move to those levels, potentially Bitcoin goes to 30K. So keep an eye out on that. Very, very important. All right, what else? Treasuries over here. So the government bonds, 2 years, the 2-year yield is coming into its important zone. We're looking to see if it's going to get faded from this 4.881 to 4.962 level. If you can see, if this starts to reject from here, so very, very important zone, we're pretty much right there. That would also bode well for crypto. Remember, if the yields go down, typically crypto goes up. So that's important to watch. Now, I've also been taking other trades in other markets. I took a trade in gold, and I'm actually up massively. I'm up like 40%. It's a small trade because I'm just kind of testing the platform for gold. Oh yeah, by the way, guys, if you did sign up with PrimeXBT, this is where you put in your promo code. I've already activated mine, but you literally just put in Kyledoops and you click activate. Already activated. So it says already activated the campaign. As you can see, you get a deposit bonus of 7%, up to $7,000 bonus if you deposit a lot of money. I don't know how much you need. You can go here to promo codes as well, and then you type it in. You need to type it in for both BTC and margin USDT to apply it to both, because it depends what you're trading with, right? If you're trading with BTC or with USDT. Okay, let's check on the copy trader guys. We've been also testing them out. Here's our portfolio. Portfolio overall is up 9.81%. So the 2 guys doing really well is Numero Uno. He's up 23.69% so far. King of price action at 10.6. And then you got Slow But Sure. He is slow, but yes, he is sure. He's up 2.74. And this guy's equity curve is really bad. Look at this. You can check the equity curves over here. So this is what his looks like. I mean, sometimes he's obviously an aggressive trader. Sometimes he's up massively, like 94%. And then other times he's down as bad as, what was that, 47%. So play around with that. I think it's pretty useful for passive income if you're not wanting to actively trade yourself. Okay, back to Bitcoin over here. Bitcoin, everything's still looking good. We were always looking at this as potentially the next higher low. So that's kind of the wick that you need to watch. Most stops are going to be under this region. I would, again, like to see price action first make it to the upside before coming down and possibly at a later stage sweeping those levels, but we can re-evaluate there. I said to you that on this chart over here, you're looking for a daily close above the key monthly. Again, the key monthly is at $23,954. If you start to see probably even a 12-hour candle close above here, I would say that you can confirm that that is the next higher low. And then obviously you're looking for a new swing high, which we've given the zones and targets to you for that already. If you look at Bitcoin over here on the 12-hour chart, yesterday it bounced perfectly off of the Gaussian channel. So 12-hour Gaussian channel bounced perfectly. Look at that wick into the middle of the channel. So that is something to watch. I showed you guys how to use this yesterday. Feel free to go through all the different charts. Let's just quickly go onto the portfolio list. Okay, let's look at some of these. Yesterday, there was one of these alts. Was it IMX that was absolutely pumping? I put it in the daily candle newsletter. It was one of the gaming tokens, guys. Go have a look in the daily candle newsletter. I used the Gaussian channel yesterday to time an almost perfect entry. It rallied very, very aggressively. It wasn't IMX, it was something else. But be careful with the one that I outlined in the daily candle newsletter yesterday. There is a big unlock that's coming for it. If you want to find the unlocks, just go through to this, token unlocks. Maybe it will come up over here, then I can remember the coin. All right, let's see. Big unlocks. Let's just move on. I don't see it yet. But these are also coming out. Axie Infinity, Sandbox, Decentraland. These are all quite sizable unlocks that are coming up in the month of March. So check out token unlocks, mark it off. If you are holding any of these, this is where I start to rebalance. So let's say I'm holding Sandbox, Axie Infinity, Decentraland, and there's big unlocks that are coming. You kind of want to rotate those coins into something else just before the unlock, because once those tokens release, right, what do you think they're going to do with them? They're obviously going to sell them. They're taking profit. They've been locked up as seed round investors for a couple of years now, and they want to take their profits. So that's important. Keep an eye out on that. The 4-hour chart over here, so it's paying off. Anytime that the market starts to establish a strong uptrend or downtrend, you can often use the 200 exponential moving average kind of as an entry point and an invalidation level as well. So no closes below this so far. Yes, you wick down below the blue 200 EMA, but that's where I added to my position. So remember, my first entry or big entry, I'd been buying from before then, but my first big entry was at 21.5. We reclaimed this, came back, re-entered some more in here, took some profits at range high, re-entered some more over here, and now I'm still looking for a sweep above that range high, possible deviation back in. Maybe it holds and things go really bullish, but we'll assess when we get there. Currently, still looking good. You want these to be postured upwards and for the EMAs to start to spread. But after a big move like this, off of the lows, look at how far apart these EMAs came from one another. So this is quite extended, which means you should expect there's going to be a cool-off period, right? Price pulls back into it. You kind of consolidate sideways and up. And as long as we can kind of hold that sideways and up, then it could still be looking good for a possible trending move. How do you confirm that the move is trending? If you're a less aggressive trader and you want to take on less risk, but it means you're going to buy it higher, right? You're going to buy at higher prices. What would that look like? Well, since we know this is the range, we can all agree, right? We can all agree that's the range high, that is the mid-range, and then that is the range low. So you want a less aggressive approach. What you then want is you want for price to obviously continue on up. Whilst price continues up, these EMAs will slowly start to track outside of the range, right? So once your EMAs come out of the range like that, there you go. There's your range. then you can say, well, now we're probably transitioning from what was a previous range into a possible new trend. If you want to stick with the range trading, of course, there's always a range, right? Even within a trend, there's a range. I know that sounds confusing, but you can be in a daily uptrend, but stuck in a weekly range. So the weekly range, let's say that's the next range. This becomes your range low. This becomes your range high over here. Then the trend breaks into that range. Does that make sense? Let me know if that makes sense. I hope I didn't confuse you. I know that could be confusing. James, was that confusing? Okay, you understand. Perfect. All right, here we're looking at these levels, the range, more precise levels. The 75% level was reclaimed. We've bounced above that zone. Let's see if we can start to close daily candles above the 0.75, so the 75% of the way through to the range. If so, then same thing. We're starting to target further towards the upside, and we already outlined a couple of days back. Let's just quickly get rid of that. We outlined a couple of days back that you do also have the potential making of an ascending triangle, right? You have a making of an ascending triangle. Let's see what the measured move of this would be if we were to consider this an ascending triangle. Then you're taking from the base of the triangle and you're measuring towards the upside in line with our rising channel. Let's just see for interest sake where that lines up. I'll put the price label on the top over there. 28,825. 28,825. So here you go. So that would fit in somewhere around there. So it's in between the mid of this channel and the top of that channel. So you can see there is indications that we could potentially get to those levels. So keep a close, keen eye out on that. If this can continue to hold as an ascending triangle, then that would be the level. But remember, when you're looking at chart patterns can morph into other patterns, right? Gosh, let me get that off again. So if you're looking, for example, if you're looking at a triangle, let's make it an ascending triangle and not a descending one. You're looking at an ascending triangle and that starts to fail. Then you can start to look at it as a potential range, because there's no set way of doing this, guys. You have to constantly adapt with the market. So let's just put that there. First, it's an ascending triangle. 1 second. Let me just turn that thing off. There we go. So first you can see ascending triangle. Once you start to break that down, then it's possible, right? You're just coming back into range. I hope that makes sense. That's what trading is about, is adapting to the price action that's before you. Every single day, you need to reevaluate the market and see how things change with time. Okay. The momentum oscillators on the 4-hour chart are on their way back up. Let's quickly look at the high time frame. Daily, also soon to start turning back up with the stochastic RSI. Let's see on the 12-hour chart over here. 12 hours still angled towards the upside, so it does have legs. I think the weekly is still hovering around the top. Let me check the weekly. So weekly has been extended for quite some time, but I'm focusing more on the lower time frames as opposed to this. This is why I don't discount the possibility of prices coming low. But you can still have really face-ripping moves over here if this continues to consolidate on the weekly chart around these high levels in the 90 percentile region, 90, 95 percentile region. That's actually where you can see strong trending moves. You get to your areas, our main target, around that 2830K level, and then we can start to consider fading that and taking profit, and maybe this starts to come down, reset. Maybe Bitcoin price at that point goes straight to 28K, comes all the way back down to maybe the 23K level, and then at that point it's reset by these lows, and then you have a high time frame, high low, and another chance to get into the market. So things that I'm looking at is, I showed you guys yesterday, we're looking at the Bitcoin volatility. We're looking at the funding rates as well to see if those are extremely negative, and the backwardation within the market. So over here, Bitcoin Volatility Index, this is a useful resource. Go to CoinGlass. CoinGlass it's all free over here. You can toggle between the 30 and the 60-day volatility. Ultimately, what I'm wanting to show you over here is if you look in relation to the history of Bitcoin, this goes all the way back to 2013. You can see the volatility lows that we had over here. These were extremely low levels, 1.57%. We're currently sitting at 2.5%. So the volatility is extremely low. That means that there's a lot of market participants that are not in the market. When you combine this with negative funding rates, people are still very bearish, still shorting the market, low volatility. It means that all it takes is one big player to come into the market and start to buy, and this whole picture changes very quickly. So you always want to pay attention when volatility is low. When volatility is low, people are complacent and they're not paying attention, and that's where the big moves happen. Now, I'm not indicating that low volatility means that prices are going to go up necessarily, because low volatility means that it's just a spring, right? You contract the spring, squeeze, squeeze, squeeze. Then when you let that spring go, that's the expansion of volatility. It could happen to the upside or to the downside as well. And I think an example would be, was it in 2018? Here, let's see. So 2018, the volatility was low there. Look, let me try. Oh, man. What? Okay, that's fine. We're showing it nicely for you there. Okay, low volatility over here. What was the Bitcoin price? Volatility was 1.65%. This is an example of when it goes wrong for you if you're long. Price of Bitcoin, $6,420. You can see it written over there. Then what happens over here? Volatility is the green bands. Expands to the upside. Boom, big expansion. Where does price go? 50% down. $3,510. So straight down. So be careful with how you use these. You can't just say because volatility is low, it's going to expand and price is going to go to the upside. You need to use it in conjunction with other tools. So one tool to use is the funding rates. If you look at Bitcoin's funding rate history, also all on CoinGlass, you can get it there entirely free. Negative funding rates. You can see over here, these are all negative fundings. Negative, 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 negative. Most people are shorting the market over here. Yes, there's occasional spikes to the upside of positive funding, but for the most part, people have been shorting the market for a long period of time. So once you see that in conjunction with high levels of backwardation meaning that the current spot price is the futures price is cheaper than the current spot price. Contango is the other way around. Contango is when the future price of Bitcoin is more than the spot price, which is what you'd expect, right? Because markets typically go up over time. So you expect that the future price should be more. So if the future price is less, it means you're in backwardation. Markets don't like to stay in backwardation for long periods of time. Creates a major imbalance. You buy, you're playing the imbalance. So you want to be buying heavy backwardation and you want to be selling prolonged periods of overextended contango. Do your own research if you're unsure what I'm talking about. So open interest, still kind of low, not massive levels, but you're looking for spikes down in the open interest over here as well. So that's the blue chart. If you see big spikes down in the open interest, that's an indication that maybe from a timing perspective, now it's time to consider getting into your positions. And you can see it over here, right? Look at the fall in open interest. So you had November, then of course, boom, big drop in open interest over there. And then going into December, this was all backwardation. That showed you could be buying, and then price followed suit and went up. Okay, looking over here, you can also see open interest on the downside. If you relate this to the history, let's just see if it's going to load. So pretty much since the highs that we had in October, it has been trending down ever since. The open interest has slowly but surely been crawling down. So keeping an eye on that. Not much to say over here with regards to the spot and the futures. Pretty much just spot has been selling off for a long time now. Price is diverging slowly towards the upside. Small spikes in the leverage traders, which might be driving up the price, but it's really inconclusive. It's not as useful as what it was the end of last year. We were using this a lot. So that's why I haven't shown it too much. Not massive changes over there. All right, guys, I have one more thing to share with you, and that is this. Rand didn't do a show yesterday. Not sure why, but he didn't do a show, which means he didn't give the Rolexes away, which means you have one more day, well, a couple more hours actually, because on his show today, which I'm pretty sure he will be doing, he's going to be giving these Rolexes away. He is choosing candidates from the Discord group as well. So consider joining the Discord. You actually have to join the Discord to be part of this competition. Everything is in the description below over here. So if you have a look, ByBit, sign up over there. join the Discord group. You actually get up to $30,030 sign-up bonus off your new trading account if you sign up with ByBit. Use the Rolex link over there. And then Bitget as well. Bitget have a big promotion at the moment where you actually, for every $50 you deposit on a new account, so you can use this Rolex one, by the way, that counts. If you deposit $50, they will spot you $50. So they give you $50. Then if you take 5 trades, leverage trades, they don't have to be big, but take 5 trades, they'll give you another $50. So for $50 and 5 trades, you get $100 free. And then you can do what you want with that. Go wild, 100x leverage, do whatever you want. And then also use that to join into the Discord group. All right, guys, give the video a like, hit the bell notification so you can be notified anytime that I do go live, and make sure that you sign up using these links below. That's it. I think that's it. There's nothing else to say. I will see you all on tomorrow's video. Have a fantastic day, and cheers for now.